Hi, Chris Duff over at Serious Land Capital Vacant Land Funding Partner. Today I wanted to comment on another podcast I was listening to over the weekend, New Home Insights. I think it's fairly well known within the real estate realm from the John Burns Consulting Group, which uh, is definitely a very well known data analyst firm regarding the housing sector, um, most specifically, and have a lot of very high level guests on it. And they had the CEO of Pulte Homes on over the weekend, and Pulte is now the third largest home builder in America. Really interesting interview, but kind of to me, a key takeaway when the interviewer was asking the CEO, when you're deciding which areas to possibly purchase land and engage in, additional master plan communities. And Pulte's usually looking for at least like 200 home sites, I believe he mentioned. So pretty significant major subdivides to go after. And like he didn't even hesitate as far as the number one reason. It's just like jobs. That's what's determining their rationale for where they are pursuing opportunities. And I kind of liked his analogy of saying, in regard to housing, it's almost like a crude assessment. There's like, okay, jobs need somewhere to sleep at nights. It's like, okay, yeah, jobs being human beings, they're physical creatures that need somewhere to sleep. So it's like, okay, metros and other municipalities are trying to bring more jobs to the region. It's like, yes, great, but then what are we going to do with these people in their off hours? I thought that was a nice boiling down of the structure of how to think about it in the most simple way possible for orienting that strategy for figuring out where they're going to target. And additionally, beyond that, they were also indicating, hey, we like going after areas where there can be non-permanent residences. So cases would be, like Florida or other places in South, oftentimes, where you might get a larger chunk of the population who might come and live in the area for a portion of the year while their primary residence might be cooler and so forth. So that was another, and that's probably more within like the quote unquote active adult population that they build toward and have, I don't know, I think like a third of all their master plan communities are oriented around that setup, maybe in some states more than others. But I thought that was a really interesting breakdown as well. So jumping on that second point, for instance, because, and I know I've mentioned his work a bit, I think his name is Nick Gurley, I want to say, but the guy who does the Reventure YouTube channel, and I think very, very clickbaity headlines. I get that's the name of the game, even for my podcast and everything too. We have like a Claude project that tries to get more click-worthy headlines to get people to listen. So I totally understand that is what you need to do there. But like his headlines are like, just hey, we're Florida is about to crash and so forth. Like, but when you actually listen to the video and look at the data he's providing, it's like usually not quite as black and white. It's very well researched, but in my opinion, not like a full indication that, the state is just on imminent collapse. And especially hearing from the Pulte CEO, that's going to be really helpful to note is that, some of these states where people are building non-permanent residences or just purchasing in those areas, that's not necessarily going to show up in the tax records because a lot of the yearly migration data that the U.S. Census Bureau puts together is following like where people are getting Medicare bills or whatever, where are they filing their taxes from and so forth, which is associated with whatever your permanent address is. But if people are still buying in areas where they're not necessarily filing some of those key items that are normally pretty accurate as far as where people are living on a year-to-year basis, that's not necessarily going to show up in the data. So you could still have significant activity in an area where it seems like there might be like a net out migration, especially domestically, or less people coming into the area because you have some of these dual residences or non-permanent residences. So that was something I hadn't thought about quite as much before, but I think is a useful indicator for when you're looking at macro level trends across the country and where to orient your targeting. But going back to the jobs piece too, I think that's another significant factor because it's also additional separation on what type of data points that we look at as, shorter term land investors / flippers versus, these much larger home builders. And so I know I've commented on the podcast and other avenues where it's like, people, when they send over deals to us, are like, hey, it's closer to this metro and, X development is coming to the area and so forth. I usually discount those factors more because to me, the most important factor by far is just like looking at the throughput of comps in the area, how much has been moving, and the property characteristics of the subject property in relation to comps, the sell-through rates, et cetera. So that's all, again, going to be far more critical to me in terms of assessing each individual asset. And usually we're moving on these so quickly that some of those larger, slow moving items, such as, a new corporation coming into town over the next year or so, that's going to, or 2 years or 3 years, whatever, and going to be adding new jobs, or like a new interstate being built through the area that'll get more traffic and so forth. And that to me is like very speculative to bet on from like these shorter term turnarounds. But like from a builder perspective, if they're investing somewhere where it might take years to fully realize, all the lots being sold, plus you're looking for more permanent residents to come into a lot of these houses that, unless it's, a scenario like I mentioned before with the non-permanent residences in certain areas of the country, within land, yes, a lot of the end buyers tend to be residential in focus, but not always. And we're not necessarily trying to fill up, 50, 100 plus lots where potentially significant job availability is going to be more crucial versus like selling one or two lots in a particular area where it's going to be less reliant on that for like a net in migration. So to me, that was a very helpful indicator of like, okay, here's the mindset more on the shorter term flipping perspective versus what builders are looking for from like macro level indicators of where their market selection is going to be. And so now I'm trying to keep more of that in mind for, again, these like multi-billion-dollar companies, how they're operating. So then we can take best practices from them as we attempt to continue to grow and grow and grow every year so we can make even better decisions on our end. So hopefully this one was helpful in helping expand your mind a little bit too. And looking forward to the next podcast here. If you're looking for funding, seriousland.capital, Land Daily Diligence Facebook group just got done reviewing like 7 or 8 deals earlier today, and landpricer.ai just made significant script updates, made it way faster. So I'm excited to get more feedback from that. Looking forward to next time. Subscribe and share. Take care. Bye.